Welcome to Team Nexa's 2-Minute Agent Advantage, where we answer practical questions from life and health agents all over the country. My name is Don Pope. I'm the principal agent for Team Nexa Insurance Solutions. Over the past 35 years, I have trained and hired more than 350 insurance agents. Today's question comes from Joshua S. out of Baltimore, Maryland. Joshua asks, see what he asks here. He says, I just received my life insurance license and I want to sell final expense. Everyone tells me I'm going to get a lot of chargebacks. Is that true? And how can I avoid chargebacks if I decide to sell final expense? This question comes along all the time. Joshua, here's the truth. Chargebacks are a natural part of selling final expense and actually a natural part of selling all insurance products. You may not be able to eliminate them completely, but you can reduce them if you actually know the numbers as it relates to affordability, helping to make sure you help select the right premium with the client and continue to serve the client after the sale. Final expense market generally includes people between the ages of 50 and 85. Many are retired on fixed incomes and manage household income sometimes of less than $30,000 a year. So that's not a lot of money. What that means is a monthly premium can, believe it or not, be actually too high or, again, too low. Research has shown that the sweet spot for a premium to keep it on the books is about $68 per month. Anything beyond that, it becomes uncomfortable for the client to afford and it increases your risk of a chargeback. According to figures we're using, a policy costing $75 a month has an approximately 26% chance of lapsing. That's chargeback. At $100 a month, that increases to 32% chance of chargeback. And hold on to your shoes. At $200 a month, the chance of a chargeback goes as high as 75%. Now, before we continue, we'd like to ask you to take a moment to like this video, follow, and subscribe to Team Nexa Insurance Solutions. This training is completely free, and your support helps us to reach and assist more life and health insurance agents. Now, back to Joshua's question. Okay, Joshua, so let's talk a little bit about how we can tighten this up. A premium, believe it or not, can also be too low. Sounds crazy, right? Policies with premiums right around $28 per month may carry a higher chargeback risk because it's so small that the client doesn't place any value in the coverage. They didn't really buy anything. It's like going to McDonald's. It may become easier for them to forget about the payment, the plan, the policy, get it replaced or cancel it because they just don't view it as an important part of a financial commitment that they made. The goal is not simply to sell the largest face amount or the lowest premium that you can find. What the real goal is to make sure you try to place meaningful coverage at a payment that the client can afford long-term and maintain it and still have value. You can also reduce your chargeback risk by doing a little technique called nurturing the business. One way to nurture the business is to use a good quality CRM to notify you of things like the client's birthday, when to send thank you cards or do periodic check-ins on the client, or even when the policy arrives. Things like this will help keep you positioned as more than just a guy that sold them a life insurance policy. It really makes you the family's life insurance agent. Reasonable premiums, clear expectations, and consistent client contact will improve your persistency and will reduce your chargebacks. And that is your 2-minute agent advantage tip. Team Nexa.